Hello, everybody. This is Tim Hart, branch manager of VanDyk Mortgage right here in Fort Myers, Florida. Thanks for joining us today. We have with us from Angel Oak. She's our account executive, does an amazing job. Stacey Flanigan. Stacey, how you doing?
Good. How are you?
Good. Hey, you guys, I brought Stacey on because we got some new products coming out, and one or two we've had already before, but I want to make sure we dive deep into these loan products, and Stacey's very knowledgeable about it. The first one we're going to be talking about are the bank statement loan. These are business bank statement loans, mainly for self-employed borrowers. If you're a self-employed borrower out there, a lot of times you have to provide tax returns. And we all know that you self-employed borrowers write off everything you possibly can, right? And Stacey, you deal with this a lot. They have no income left over when they write it all off, correct?
Exactly. They have good CPAs.
Right, which we fully support you in doing that. Go for it.
Absolutely.
But the problem is when it comes to lending, it's black and white. It's, hey, your net is this. We don't care if you made $1 million in sales. It shows you wrote off 955,000 of it, right? So we have a program now. It's business bank statements, and we can use those deposits for income. So Stacey, can we dive into this? So for a self-employed borrower, they come to you with your program. And let's start off with the bank statement loan and how they qualify with the 12 and the 24-month bank statement loan.
Absolutely. So what I love about the bank statement program is it gives you and your borrower more buying power. Because like you said, you're going to write everything off when you're self-employed, as would I if I was self-employed. You're going to write everything off. So when we use the bank statement deposits, whether it's business bank statements or personal bank statements, we're going to take the deposits that are going into your account for the last 12 or 24 months and average them together. So when you think that the borrower's self-employed and they say they only showed $45,000 for the year, I might be able to show that they made $150,000 for the year. So the buying power for that borrower just increased trifold, even more than that a lot of times. So borrowers, bank statement borrowers are great borrowers. They're self-employed. They usually have great credit. It's little as 10% down. There's no mortgage insurance on it or anything like that. And we'll calculate the income for you up front. So Tim, when you send me the bank statements, I'm going to get them reviewed and tell you what your income is that you have to qualify. So then your real estate partners know this is the size house or this is the purchase price that I can start looking at for these borrowers. So I love the program. Again, we go up to as little as 10% down on them. We go down to 600 credit scores on them. And just averaging those deposits up front for you to know what you can qualify for, to me is a huge benefit.
Yeah, and so just to recap there, so 10% down, and you can go 600 score can do 10% down?
No, we do need a 700 for 10% down. Okay. So the 600 would get you a lower LTV, a little bit more money down.
But 700 score, you're getting 90% loan to value, so that's 10% down. And if you're watching this video, so like what I've seen as we do these is, I don't want it to come off like we're pushing people to borrow everything they possibly can. But a lot of times when I'll have like an AC guy come through, they have their own AC company, and they got $100 grand a month rolling through their bank account. They could qualify for whatever they want monthly payment wise. Now they don't want that high of a payment, right, for that income. But basically for you self-employed borrowers, it removes the concern for income. It's either you need to claim more on your tax returns, which is paying more towards the IRS just to qualify for a home to pay back that mortgage, or you do the bank statement route, you pay a little bit of a higher of a rate, but you're not paying all that in taxes, and you can do it with 10% down with no mortgage insurance. Right, Stacey?
Exactly. And we do put an expense ratio on there for those same reasons. We don't want all of their income or all of their deposits going towards their mortgage payment. So we apply an expense ratio because we do know that they have expenses for their business,
right?
Whether it's 15, 30, 50, whatever, business they do, that's how we are going to apply it. So again, not every deposit is going towards a mortgage payment. We want them to be comfortable, yet we know that when they're self-employed, they do have all those write-offs. So now they can still get into the house of their dreams by using their bank statements to qualify.
And it usually ends up being what we've always based on 50% of the average deposit, right?
Yeah, we default to 50% expense ratio. If that works, we're good. We run with it. Now, if they're like a realtor that has hardly any expenses, we can do as little as a 15% expense ratio, meaning I'm going to use 85% of their deposits. Somebody that's 1099 or works from home, maybe on the computer, maybe they're an IT person, they're not going to have much overhead. So we're going to look at their job, what they do, how many employees do they have underneath them that they pay a payroll to, and how many locations they have, if it's more of a store type business. So we use common sense in that. But yes, we default to 50. And then if we need more, we'll look at the other route of getting a lower expense ratio.
Yeah, and you brought up another question I was going to ask is who else, besides, I own my own roofing company, right? That's made for this type of product. But you mentioned already a realtor, you mentioned someone that works from home. So who else qualifies for using a personal or business bank statement loan? Like you mentioned realtors. I mean, who else?
It's anybody that's 1099 or self-employed for the last 2 years. Now, we talked about using 12 months versus 24 months of bank statements, and that's going to depend on the borrower. You get a slightly better rate if they choose to show us the average of 24 months.
Right.
But maybe they had a little downtime during COVID. So the first 12 months weren't as strong, and they just want to show the last 12 months. That's fine. They still do have to be self-employed or 1099 for 2 years, even if they're just going to give us 12 months of bank statements.
Okay.
The other great thing with using personal bank statements is if there's a spouse, or even business bank statements as well, if there's a spouse that's W-2'd or gets fixed income or child support or alimony, we can still use that additional income with 2 years of W-2s and pay stubs. I never want to see tax returns on a bank statement program, but we can use their W-2s and pay stubs again to give them more income and again give them more buying power.
Right. What about servers? I'm a W-2 server, but I don't claim all my tips, but I put them all in the bank.
That's a tough one. I mean, we all did it getting through college. I did it, but now because they're W-2'd, I cannot do a bank statement program on them.
Okay, so definitely real 1099 self-employed borrowers.
Yes.
Cool. All right. Anything else we need to know about that product right now?
We do owner-occ, non-owner-occ, second homes, 1 to 4 families, condos, non-warrantable condos. Yeah, it's pretty much anybody.
Listen, awesome. So bottom line is, Stacey, I think if you are self-employed and you don't claim a lot on your income on your tax returns, try the bank statement loan out and you may be surprised, and you have a lot of options: primary residence, vacation homes. She just named it condos, non-warrantable condos. Duplexes are part of that, right?
1 to 4 family. Yep.
1 to 4 families. Yes. All right, Stacey. Well, I appreciate you being with us today. And if you are out there watching and you are interested in talking to someone about this product, please call my office. I've got myself and then plenty of loan officers that can help. Office number is 239-437-4278. Website's timhartjr.com. Feel free to jump on that as well. And please share the video with someone you know that's self-employed. You may help them out. It may save them thousands of dollars and get them into a home. This works for refis too. We didn't even say that, did we, Stacey?
Yes, you're right. Works for refis. Cash out, totally fine.
The video never ends, does it? It never.
No, we could go on forever.
All right, Stacey, I appreciate you. Thank you everybody for watching. Thanks, Stacey.
Thank you.